Welcome to the Business Finance Bulletin, episode 299. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, updates on CBILS and bounce back loans with more lenders added. Aldermore Bank survey reveals impact on businesses and steps taken to adjust, and government proposing support to ensure trade credit insurance continues. We'll start this bulletin with our usual look at what's going on with the Coronavirus Business Interruption Loan Scheme and the Bounce Back Loan Scheme. Figures have been released to the 11th of May, and it shows across all schemes the total amount of money lent so far has come to £14 billion. Well, how does this break down? Well, first of all, let's take a look at the Bounce Back Loan Scheme. There, a total of £8.3 billion has been lent out, with loans approved of 268,173. In terms of applications received, well, that comes to 363,646, which is an approval rate of 74%. Now, considering the scheme's only been going for 2 weeks, that's a stunning amount of money that the banks have lent out, and it does show what the high street banks particularly can actually do when they're under pressure to get money out the door as quick as they can. Now, in terms of panel members, there were 3 new accredited lenders added to the scheme, and they were Tide, Bank of Ireland and Skipton Business Finance. Now, there's still some criticism around some of the banks have been really slow and getting tied up in bureaucracy, and the main one still seems to be Barclays, who don't seem to have their system quite tight enough yet. So no doubt pressure will continue to be put on them to make sure they get their scheme up and running and firing on all cylinders. Let's move on now to CBILS. Well, there £6.1 billion has been lent out, with loans approved totalling 35,919. In terms of applications received, that totals 71,316, which is an approval rate of 50%. You can see there's a big difference in the approval rate versus the bounce back loan scheme at 74%. And this is a reflection of the fact that the bounce back loan assessment is very automated, whereas CBILS, they've got a much more rigorous underwriting standard. So we would accept a higher number of rejections. In terms of the panel of lenders that can now accept and process CBILS applications, 5 new lenders have been added, and they include Liberus, Shawbrook, Market Finance, Bank Lumi and Capital on Tap. Another bit of news this week is that Starling Bank has tied up with Funding Circle to offer up to £300 million worth of funding through the Funding Circle platform. Presumably Starling want to access the institutional investors that Funding Circle have tapped into. This is good news. It's just really good sign of how the fintechs are collaborating to make sure that they get finance out the door as quickly as possible. So overall, good news. Still some little sticky points to address, but it's clear that money is getting out to those businesses that need it. Let's move on now to see what impact the coronavirus is having on the state of British business finances. A new survey carried out by Aldermore Bank has revealed that of the businesses they spoke to, the average drop in income is about 34%. However, for 25% of those businesses surveyed, they said that their drop in income came to 70%. So there's a really high fall for those businesses. Which sectors are suffering? Well, perhaps not surprisingly, it's hospitality and leisure are the biggest hitters, and also the food and drink industry. Now, what are these businesses doing in order to counteract this? Well, 72% of them said they are now reviewing and reducing costs, and 67% of them said they're actively looking at ways of increasing income by looking at other strategies, whether it's selling more online or making use of new technology. So, of course, the question is, what steps are you taking to safeguard the future of your business? This is not a situation where you can be complacent and hope things that will return to normal. We are very in different times here now, and so you've got to take proactive steps in order to safeguard the future of your business. Naturally, business confidence has taken a hit over the last couple of months. Now, one thing that the government is keen is to make sure that businesses have confidence going forward to trade with each other. Now, if you want to encourage people to do business with you, naturally, sometimes you can offer credit terms, whether that's 30-day, 60-day, 90-day terms. Now, historically, businesses, in order to get comfort about offering those sort of facilities, have taken out trade credit insurance. But that market has got very tight lately. Naturally, our insurance companies offering trade credit policies really don't know the extent of the risk they are taking, and so credit limits are being pulled. Well, the government wants to give businesses confidence to offer credit terms, and so what they've said to the industry, alongside the Association of British Insurers, is that they are looking to put together a reinsurance package. So this will give the providers of trade credit insurance kind of comfort that there is a backup plan and support by the government in order to write these policies. So it's good to see all sectors pulling together there in order to make sure that businesses have got confidence to offer terms. That's it for another bulletin. Thanks very much for watching and listening. And of course, if you did enjoy it, please don't forget to give it a like and a share. So that's it for another week. Look forward to being with you next time. In the meantime, have a safe and profitable week.